Good evening, everyone. We'll wait for another 3 minutes and we'll start by 4:35. We'll start by 4:05. Good evening, all, and a very warm welcome to yet another webinar by MICS. Today, we all are here, and you all are here to we are here to explain you about the corporate tax return, the most awaited corporate tax return which has come. Now, it has been almost a year that UA tax has been introduced, and we are here to now pay the taxes to the government, now pay the taxes to the authority. But before that, we need to understand how to file the corporate tax return. Now, as other tax returns or the other VAT returns, which has been a very simplified VAT return, when we see you just have to insert the figures and the VAT return is being circulated to the authorities. Unlike that, the corporate tax return is not that simple as we thought about it. Many of the companies or many of the businesses which are right now, as you have joined us, you might be aware that your corporate tax return is to be filed by 30th September 2025, which is just now 3 months away. And before filing, you need to understand what are all the information that you need to fill into this return. So we are here to explain you this in our simplified manner by MICS. So that is why we all are gathered here, and we will be explaining throughout this presentation or throughout this session that how you can file this corporate tax return in a simplified manner, or what are the major or key areas where you need to focus on. As before filing the corporate tax return, the important thing you have to make sure that your books are being properly maintained, you have proper set of accounts that is being maintained, and based on that your return filing would be simplified. So we are here to walk you through this all elements. Accordingly, you will be able to understand which are the key areas where as a businessman you would be able to focus and get an understanding and simply file your corporate tax return. Kiran, can we go to the next slide? So here we are again, MICS way, that is the most intensive and compliant season. We are here, MICS, to help you and make your simplified way. As always, we have tried our best to simplify the complex corporate tax law for you. Most of you must be attending our earlier sessions. You must be aware that we have been doing multiple sessions since starting to help and make the corporate tax simplified in a most simplified manner so that the people, the common people can understand this. So here we are with this session. Can we go to the next slide? As you all must be aware, and now it's a year, so no one has to mention that registration is one of the important compliance that we have to make sure with regards to corporate tax. It's a rule of 393 which mentions that you have to register your business within 3 months since you have set up or since you have done the incorporation of your company, within 9 months from the end of your financial year, whatever financial year you have been following. You have to make sure that within 9 months from the end of that financial year, you need to file your corporate tax return. And in any case, if you are deregistering or if you are doing your company liquidation or you're ceasing of your business, you have to deregister from corporate tax within 3 months. So these are the three major timelines or three major compliances that you need to make sure of with regards to the corporate tax. Now, FTA has been kind enough to, just give you a simplified to levy of the penalty that is being levied for late registration of your business or late registration of corporate tax. So, if any of you have missed the deadline or have missed to register your company within the deadline of 3 months or within the deadline which was earlier given to your businesses, you are now available to waive off this penalty. What you can do is you just have to make sure that your corporate tax return is being submitted within 7 months from the end of your financial year. The majority of the businesses in the UAE have been following the financial year of Jan to December. So if Jan to December is the financial year, you have 31st July 2025 as your due date to submit your corporate tax return and waive off this penalty. So anyone over here who has missed it, make sure that your return is now being submitted within 49 days. From now on, if we calculate, we just have 49 days and you can submit your corporate tax return and waive off this penalty. Now, our team, Kiran, would walk you through these major compliances which would be applicable on this. Post that, Kinjal and Kushal will be walking you through this major important aspects that you have to make sure of while filing your corporate tax return. Over to you, Kiran.
Good evening, everyone. Thank you, Karishma. Can we go to the next slide, please, once? Yeah. So before we explore the corporate tax filing portal, let's take a moment to understand the pre-preparation required for the filing of corporate tax return. Firstly, the most important thing is the books of accounts. They serve as the primary source material, and any inaccuracies in the books of accounts will lead to incorrect tax filings. If we have a proper books of account maintained, then it is the most beneficial step for the corporate tax return filing. And while preparing for the books of account, we have to analyze the options also that we need to opt for in the corporate tax return. So it can be realization basis or some transitional provisions or some exemptions also. And for this, we will means after books of accounts have been prepared and the analysis of options have also been done, we can prepare a mock computation. Before filing the corporate tax return, it is very important to prepare a mock computations. It gives us a preliminary tax computation or estimated tax liability also. And once we have prepared a primary mock computation, then we will be ready to file. Can we go to the next slide? So why is tax computation so necessary? Because of the four major reasons. It helps us in tax estimating the tax liability in advance, which will reduce any surprise element. And it also identifies the potential errors or discrepancies in the financial record. Means before filing the financial records also, if we do the mock computation, then it helps the auditor also to make the tax memos and tax notes very effectively. Then it also helps in effective tax planning for the future cash flows or in tax payment that has to be made. And all above all, it helps us in compliance readiness. Means it will make us prepare for the compliances that are going to be followed. As Karishma said just now, is if any entity has incurred or has levied any late registration penalty, so for them they should assume that their financial year end means the corporate tax return due date is 7 months from the financial year and not 9 months. Like the most of the financial year ends from on December. So the return due date is 31st July only. If they file within 31st July, the late registration penalty will be waived off. And even if it is paid by the any entity, it will also be refunded to them as per the public announcement made by the FTA. For those who have not levied any late registration penalty, for them it is usual 9 months from the end of the financial year, but post 9 months there would be a 500 dirhams penalty per month. And for them, 30th September is the due date. So, what all documents will be required for filing the return? Means to attach as a documentation, we have the audited financial statements that would be required, any revaluation reports if we have opted for the transitional provisions or any other provisions, and documentation supporting the reliefs means similar to the transition reliefs. But the information which will be required is the financial statements for the income statements and balance sheet, and the average number of employees during the year. It is also a mandatory field because of which you cannot file the corporate tax return, and the details of the transactions with the related party or connected persons. Thresholds to keep in the mind are means for natural persons when the business revenue goes above 1 million, then only registration is applicable. For the all registered entities, 375,000 dirhams is the tax-free income for them. To opt for small business relief, 3 million revenue should be below 3 million, so only they can opt for small business reliefs. And audited financial statements, the revenue threshold is 50 million. If you have any revenue that is above 50 million, you have to get yourself audited. So after completing all the natural paths, so means after completing all the textbook guides, now we can actually go for the corporate tax filing portal. Over to you, Kinjal and Kushal. Thank you.
Thank you, Karishma and Kiran. And welcome again to all of you. Quickly summarizing what Kiran just mentioned, the new due date now is 31st July and not 30th September because there were a lot of cases of penalty and FTA has been kind and the taxpayer should definitely take an advantage of it. So yes, consultants are now more scared of the servers crashing on 31st July than 30th September. I'm sure that for all of you, audits must be on fire. And one thing the auditor would ask you for sure is, have you done the CT assessment? Please submit your CT and TP assessment report. Please submit the mock computation. We want to the provision in the books of accounts. Please submit the TP policies which you have in place because we want to make sure that our audited financial statements are in line. So while the auditors are pushing you towards compliance, today we will also help you to feel how your July or September will look like and what all you need to prepare to file your return of income. What all do you really need to file? There are a lot of questions in the chat box which I see regarding what is required to be submitted, what is mandatory, what is not. Even if I'm keeping the revaluation report, is it necessary that I need to submit that revaluation report with my return of income? All these kind of questions we will try and answer today for all of y'all. But before we go and we display the return and run it live for you, uh, I want to know from you all, what do you feel about the CT return filing? How easy, moderate, or difficult do you feel it is? Can I quickly have it on the chat box? What do you feel? Is it easy? Is it moderate? Or is it difficult? Don't know yet. Okay, moderate. Okay, type. I like this answer. Can I have some more? I just want to check your engagement. Is everyone still there? Because I want everyone to be there, because what we are going to do now is going to go live on the Imara tax portal. So I need all of yours attention. Difficult. Okay. Moderate. Mixed. I think I have a lot of mixed reviews. So to be very honest with you all, over a period of 6 to 8 months in which I have seen the CT return, my opinion has changed thrice. When the CT return was freshly out, I felt it was a piece of cake. When I tried my hands on it, I took it a little longer than expected to file it. And thanks to the free zone and the accounting adjustment schedules, which we will be taking you all through, and you all will realize why did it take me a little longer than I expected. And now when I look at it again, I feel somewhere it is manageable. Because now I know what that return requires. I know what concepts I need to have in my mind and go to file that return of income. So yes, it's a first return of income. And what we have to be really cautious about is what choices we are making while filing this return of income. Because few choices are irrevocable. And few choices will appear only once when you are filing your first tax return. So we will take you through all of this. Just stay tuned with us. Can I go to the next slide, Kushal? Once you'll just go into the tax portal, you all will see 8 plus 2. I'm telling 8 plus 2 because when you log in, what you will see is the 8 buckets in which the CT return is divided. But there will be 2 more buckets which will open, and it will depend on the choices which you are making in your corporate tax return. So we will show you how, when you go in, how there are 8 schedules and the 2 schedules open when you make certain choices in the returns of income. And in total, if you see what is displayed on the screen, there are total 20 schedules to be filed. And this is the reason it took me a little longer. 20 schedules. Not necessary that all the schedules would be applicable to all of you. There would be some schedules which will automatically eliminate depending on the choices you all make. But yes, the return is lengthy, the return is data heavy. And we should be cognizant of this fact now, because if we want our penalties to be waived, if we want to comply within time, plus, return filing has a recurring penalty. It has a penalty of 500 AD per month. It is not a one-time penalty. It's a recurring penalty. So, to make sure that we are compliant in time, we have to prepare now because the return is data heavy. And therefore, what we have decided is I'll just one by one take you through all of the schedules. I am sure you will not be with me at 4:30. It will be too monotonous. And therefore, what we want to do is we want to play it out. And therefore, what I'll do is I'll introduce my Virat Kohli of return filing, Kushal. He has filed at least 100 returns, and therefore we call him the Virat Kohli of return filing. And what we will do is I will be Kushal's client for today. I'll explain him my case. He will prepare a computation for me and he will take you all through the FTA portal. And he will take me also through the FTA portal. And me, like a typical client, will have 100 questions for him, which he'll have to answer. Please feel free to ask questions in the chat box as well. I'll take those questions up and ask to Kushal live when he is going through the Imara tax portal. So let's do it, Kushal. Can I have my case study displayed? It feels so good to see that I'm doing something else apart from every Thursday coming and talking to you about taxes. So, yes, I do a lot of investing and I do believe in a lot of structuring. I'm sure all of you all must know until now that MICS does believe in a lot of structuring, and therefore I had opened a company through which I invest. And that company is called Kinjal Investment FZE. What that company does, it does invest in global equity markets, it invests in UAE equity markets as well. And therefore, I've earned a decent amount of income out of my investments. And that I'm going to share with Kushal. one thing for sure, I have decided not to opt for a qualifying free zone person. Yes, my activity is as such where I can get the benefit, but because of some reason I'm not complying with another condition and therefore I don't want to go into it. I want to file my return as a simple individual, want to live a simple life. I know many of you all want to see the free zone schedule and I'll show it to you all after we have displayed it, but right now we'll keep it a little simple and show you all if I'm not opting for a free zone person, how my return will look like. So, yes, Kushal, this is my income statement in front of you. I
So,
have my total income of 10 million, out of which 6 million I spent, and those were my expenses. And I'm sitting with a profit of 4 million. So that's my profit. And as far as I know, tax, I would be liable to pay on that 4 million of profit because I am not eligible for any reliefs, which I feel. Apart from one relief, which I want to mention, is that I receive domestic dividend. My company,
okay.
not me, in fact, my company has received domestic dividend, which I think it would be exempt, and I'll get the normal AED 3,75,000 exemption. So this is my case. Now I'll rest it on you to help me to compute my taxes and file the return of income.
So, first of all, thank you, Kinjal. You give me the honor to serve you for the tax return filing and all. So, before starting, as you said, I must think that you have the tax liability computed in your mind. And
Yeah,
as per you, you must have calculated this amount that is displayed on the figure that you have 4 millions of profit, out of which 3 million is your exempt income, and you have earned as per taxes, as per your mind, your net profits will be 3.7 million dirhams. And you
absolutely.
must have think of that you are paying around 300,000 of the tax liability for 2024. But
This
this
is
is not,
perfect what I had in my mind.
yeah,
Yes.
so but this is not the case that will be there. You know, the books that we prepare according to IFRS or some accounting standards, that is not same that we file through the taxes. For taxes, the taxes we have to pay on the taxable income, and for to calculate that taxable income there are a lot of adjustment that we have to do, and after doing that adjustment we have to submit that in our tax return, and we have to file that accordingly. But before filing that in our tax return, I just want to have the confidence for you of the tax computation. As Kiran have told that before filing our tax return, we should have our tax computation ready to have the tax figure in mind, to have the tax provisions for your balance sheet or to final your to complete your audited financials and all. You should have the tax figure in your mind. For that, I want you to have a tax computation, and I am ready to help you for that. And for to do the tax computation, I have some questions for you. That
Sure.
you have mentioned, you have shown me your financial statement that you have in displayed. Before that, I just want to ask you that you have a profit of 500,000 dirhams, that you have shown that you have, this is the fair value gain. So
Correct.
what do you think? And I just want to ask from the audience also, what do you think? Do we have to pay taxes on these figures or no for 2024?
I am following accrual basis, right? I am not eligible for cash basis. So I think I should.
You should have to pay taxes as per you.
Yes.
But that is not the case. In your situation, the taxes has given us the option that we have the option that we can pay the taxes on such unrealized gains. You haven't received any cash or any bank receipt for this gain. This is just a notional gain that you have booked in your financials. So taxes give you the option that you can pay taxes on such incomes only on when you realize these gains. So for now, you have the option that you can defer the taxes on these incomes. So there is a good news for you for on this, that you don't have to pay taxes on this particular 500,000 for 2024.
Oh, that's really good.
Yeah,
So I can defer this to the next period when I actually realize it. Is that what
yeah.
you mean?
So by this way, you can manage your cash flows. Basically, this is this is nothing that you will not pay any taxes, but you will pay taxes only when you receive the income. That is the case. You
Understood.
don't have to pay
So
on only on the notional income.
so are you talking about that concept which I heard from someone called realization and unrealization
Yeah,
basis?
you are
And
absolutely
then
correct.
that to the option I have to select only in the first tax return and it's
Yeah,
irrevocable?
yeah. That's the additional point is that this is only have to be selected during the first tax return, and this is irrevocable. This can't be reversed for in future years, or this is only option that we have to opt while filing our first tax return. And so I have also started preparation of your taxable income. and as per you the book profit was 400,000 for sorry 4 million, and now this unrealized income we will deduct from your taxable income, because this on this particular 500,000 you don't have to pay any taxes in current year. And then another adjustment that will be for you is that the dividend that you have earned from a MICS International PJC, which is a UAE company. And as correctly mentioned by you, that any dividend earned from a UAE company, irrespective of any other condition, will be exempt from corporate taxes, and that's why I have reduced 300,000 from current year's income. This is the case. But another thing that I want to add here is that if the dividend that you have earned was from a foreign company, then for foreign dividends you have to satisfy another conditions called participation exemption condition to get the exemption benefit. But if as you have earned the domestic dividends only, the following income will be totally exempt from the taxes.
Perfect.
And now, what I can see in your financials is that you are spending a lot of in your client meetings and then your staff outings and all. So there can be problem for you on that. Are you aware about that?
Why problem? That's my business expense because they are my clients.
But have you booked that properly? And do you, as per you, what I understand that you will get full deduction of these 250,000.
Yeah,
Am I correct?
because these are like general expenses. I've been incurring them since all my life, and they are my
Oh,
clients. It's a business expense, so why disallowable? I've booked them under entertainment expense. That's where we
yeah.
used to book it.
Oh, you have booked that as an entertainment expense. Now, I just want to ask the audience, what do you think? Like, will Kinjal be able to get the benefit of 250,000 or some another amount? Yeah, Kinjal, I have to disappoint you in this particular matter, because you will not be able to get the benefit for whole 250,000 for this. Because
Oh,
as per law, these expenses, I will give you the definition of what entertainment expenses are. Any expenses incurred on meal, accommodation, or traveling for particularly four type of persons, like your shareholders, your business partners, your suppliers, and your customers. If these expenses are incurred for these particular four categories of person, these expenses will be treated as entertainment expenses for purpose of corporate taxes, and hence will be allowed only up to 50% of your actual expenses. So for this 250,000, you will get only benefit of 125,000 dirhams. So that's why now I have to adjust this 125,000 in your books, as it will increase your taxable income for the current year.
oh, that's sad. So I really want to see how this looks in the return of income when we go and file it on the FTA portal.
Yeah, we will do that.
Yeah,
Don't be so hurried, because first we need to assess like what is our tax liability. First we have to assess
sure.
that, and after that only we will go through the return, because this is the something that we can plan out. These are something that we can plan out before filing the tax return.
Okay.
And you have incurred some expenses for same categories to staff also. So what do you
Yes.
think? These will be disallowed or not?
Same principle would apply, I think.
No, no, no. That's why I have told you definition also, that only for
Oh,
four categories of person, like your client, supplier, your shareholder, and business partner. Anything incurred for staff will be 100% allowed. So your 50,000 are safe. You can get the deduction of 100% for your 50,000. And apart from your profits, what I can see that you are also getting the salary of 700,000 dirhams. That's huge amount annually.
yes, because
Do
because a lot of substantial time is going into doing this, and I'm a chartered accountant, so yes, I do deserve this much.
This is what you think that you deserve. Have you taken any consultation from HR consultancy or your HR consultants, that how much actual amount that you can get, that if you have your profile in your market, neither
I think I
apart from
heard
your
in some
company?
webinars that there is some term called benchmarking which we need to do for this.
I think you must have heard that in MIC's webinar that we have done last week, that we have to do the benchmarkings for the related party transactions. So no worries. So I think as per the market, do you have any idea that how what will the benchmark salary for you? You are getting 700,000, but as per
Yeah.
benchmark, what will be the salary for you?
So I think I had consulted few HR consultancies
Okay.
to know how much should I get. And I think the range which they had said me was maximum to the extent of 500,000 dirhams.
Okay, then you will get benefit for corporate taxes only up to 500,000 dirhams. The 200,000 dirhams that you have got will be disallowed from corporate taxes, and hence, sorry, but I have to disallow that expense in the amount column, and that this amount will be added back to your income.
You are
So
giving me
after
only bad news. Is there any good news for me?
no, there are good news that will have come that for in which I will also come, but as of now, what I'm thinking that you are paying your taxable income will be around 3.5 million dirhams, and you have to pay 9% taxes on this income, which will be around 330,000 dirhams for now. Now, what do you think? This like, are you willing to pay this much amount of taxes, or you want some another relief from my end?
If you ask me, I would pay zero taxes because that's why I'd come to Dubai.
No, that will not be the case. But what I can help you in that, like I can plan the taxes for you, and for that, I just want to have one question from you. Do you have any another group company that is in your whole group, and you are incurring loss for that company?
Yes, I do. I do. And it's
Can you
called
please give me
Karishma
the details?
Consulting. I do.
Okay.
And then there I've incurred a loss because I've made no business and I've just incurred expenses. So yes, there is a company and where I have around 1 million of loss. So you are saying that a loss of another company of mine, I can claim for my this company.
Yeah, this is the magic of the UAE corporate tax that is there. So there is a provision of transferring of tax losses, which says that if there are two companies which are commonly owned by 75%, so if there are two companies which have common shareholding of 75% directly or indirectly, they can transfer their tax losses. There are some limits, but they can transfer their tax losses. And in your case, the 1 million dirhams that you have losses from Karishma Consulting, you can take the losses from Karishma Consulting and reduce your taxable income for current year. So after adjusting this tax loss relief, you can, that is 1 million dirhams. Your taxable income will be 2.5 million dirhams only. And now you have to pay only 193,000 dirhams of taxes.
This
So
is some
what you
real
have,
magic you have done, Kushal, for me.
yeah, this is not me who have done the magic. It is UAE government or UAE FTA that has done the magic. So from your mind that you were thinking that you will pay around 300,000 dirhams of taxes, after adjusting the taxes, you will now only pay 193,000 dirhams of taxes. So by explaining this, I just want to tell you that the books that you have prepared will not be same for tax purposes. For
I
tax
just have
purpose,
one question.
yeah,
I
sure.
just have one question. Sorry to interrupt. What about the tax return of Karishma Consulting LLC?
So in Karishma Consulting LLC, Karishma,
Yeah.
that entity also have to show that they have transferred this amount of losses to their another company, and Karishma Consulting LLC will not have any tax losses remaining to carry forward to future years.
Okay, because I've already carried forward it
Yeah,
now.
yeah, you have taken that now, so that is not the case.
Amazing. Okay, I think BB, that answers your question.
Yeah, yeah,
Yeah.
and now just one question.
Hmm.
Uh, what do you think? Like your tax payable that is showing in your books. This is something that we have computed for auditing of our books of accounts, and as per you will make the provision of 193,500.
Yeah,
I'm
I'm
am
just
I
going
good?
to take this and give it to my auditors. That's what I'm supposed to do, right? Because they are
So
cracking my head to give them the tax computation.
so what do you think? You will pay this amount, or there can be adjustment to this amount, or there is a compulsion that amount that you have shown in your audited financials will have to pay. There can't be change in, and there can't be any change in that amount. What do you think?
Yeah, that's what my next question to you was going to be. So given that we have computed this, I just want to go and pay this so it's off my head. So what do you recommend? What should I do?
So this is just a tax provision that we have made. This is not tax liability that you have to pay. This is the tax provisioning that will be made for the books. If there are any additional adjustment that we may have to do while filing the tax return or before filing the tax return, that amount can be changed. So the amount tax provision as per your books can differ from the tax that you actually pay. So we have clients from another clients also. We have questions from another clients also, that what will happen, like if I'm making provision and if there any change in future, then what we will do. Then no worries, your tax provision can differ from your actual tax liability.
Kushal,
And
there is
yes,
a concept. Okay, you can carry on and then I'll just ask my question.
you are asking too much questions, Kinjal, now. So
That's what clients pay you for.
yeah, yeah. So now we will start filing your tax return. And for that, what I have to do, I have to go through to a portal called Amara Tax Portal. And
Mm-hmm.
for your ease, I have already filled up your login ID password that already have with me. Now I will just log into the portal and we will start filing your tax return.
That's really great. But before we log into the portal, just one question I want to
Yes.
ask you for the benefit of a lot of audience. And there is a lot of confusion regarding these two concepts. One is transfer of tax losses, and another
Okay.
one is a tax group creation. So let me just clarify this for you all. Transfer of tax losses can be done when there is a common ownership of more than 75%. And a tax group creation is possible when there is a common ownership of 95%. So these two are not the same concepts, they are very distinct in themselves. Tax grouping involves application to FTA within a particular time so that the tax group is formed. FTA would approve that application and then a single return of income by the parent company has to be filed. While when we transfer the tax losses, it's not that complicated. You'll have to file tax returns for both these entities, but you will have to show in both the tax returns that one entity has taken the loss and another entity has transferred the losses. So these two are very distinct concepts and we should not get confused between these two. And transfer of tax losses is a very, very important concept because not necessary that companies have a common ownership of 95%, but it is very much possible that the companies have a common ownership of 75%. And then there is a case that you can transfer losses between your UAE entities. And we have seen in our clients that it is resulting in substantial reduction of liabilities, as you saw in my case as well. So yes, Kushal, please free to add on if I've missed on anything, and then we can move on to the Emara tax portal.
So, Kinjal, I just want to add one thing is that for tax grouping, 95% holding is not only the one condition, there are four, five
Correct,
more conditions that we have to
correct,
satisfy. And
correct.
as a concept, these two are totally different concepts. We can't merge because tax group will treat your four, five entities as a single taxable person. And there are a lot of pros and cons of forming the tax group. But for transferring the tax losses, you just have to
Hmm.
be a common shareholding of 75% and you can transfer the tax losses between the group entities. Now, can we
Okay.
start the return filing for you, Kinjal? Or
I'm
you
very
have any other?
scared, but yes, we can.
Yeah, sure. So this is your portal that we have logged in. You must have been registered for the corporate tax before your due date. As you can see, there are no tax liabilities that you have to pay. Now, for filing the tax return, on the left-hand side, we have to go to the corporate tax and then go to the corporate tax filing. And here in this position, we have to start the filing option.
Okay.
Okay.
So I'm going to ask you a lot of questions here, okay? Because I have a lot of
I'm
doubts.
I'm I'm
And
totally prepared for your questions. No worries.
that's great. And I would request the audience also to please feel free to ask any small doubt also if you have on the portal. We will try and answer them all, and I'll take that up as and when we progress.
So, while filing the tax return, this is the basic information that FTA has taken from your registration that you have done. That what is your address, is there any contact number, your legal entity type, and everything. So, first thing that FTA will ask for tax return filing is that is the above information correct? So, before proceeding, I just want to confirm that everything is correct, or we should not. We should proceed.
Right now it is correct, but I want to know what if it is not.
So if you have to say if it is not, then you can select no. But in case you want to change anything in this, you can't change that in this application. For that, there is another application called amending the taxable person application, and that will take around 1 month to complete or to amend your details.
Oh,
So for now, if anything is wrong in this, then you can go with same details. And after submitting your tax return, what you can do, you can submit another application for amending taxable person details, and you can change these details.
that makes so
So
much sense. Otherwise, I
yeah.
would just miss my due date.
Yeah, if that is the case, like sometimes what happens if another application is in process, then you can't proceed with another application. So if
Yeah.
amending taxable person application is in process, then there can be a situation that this application will not be proceeded. So to keep in mind, with keeping in mind the due dates for tax return filing and all, we will proceed with these details only, and after that we will submit the application called amending taxable person application. So I know that you are not an unincorporated partner, or you are not a partner in unincorporated partnership. So I will select no in this. You are not a government entity. I will select no in this. This is for selective businesses. The options are there. Now, first thing that the FTA will ask from you, is that what is your revenue? So
Mm-hmm.
as I remember that you have the revenue of 10 million dirhams.
Correct.
Okay. You are following cash basis of or accrual basis?
Accrual basis.
Accrual basis. Can you follow the cash basis for your business? What do you think?
I think there was a limit of 3 million dirhams for following cash
Mm.
basis.
You know more than some consultants also. So basically, if you have revenue for more than 3 million dirhams, then you have to opt accrual basis only. You can't prepare your books on cash basis. So this is the
Hmm.
option. Now
So
you
I
have
have a question, Kushal.
yes, yes.
Two questions, in fact. My dear friend Zuberia wants to know that there's an option showing along with this amend. Is it directly allocated to the amendment year? To which the answer is no, Zuberia, because when you go to amend, it will take you to the amendment page to amend whatever you are required to amend in the basic information. And then when you do that, there's a separate application in itself which is open. So in that case, it will not allow you to amend. It will not enable these tabs which are shown in gray. It will not enable them in blue, but you will have to file a separate application, which, as rightly Kushal mentioned, takes around 1 month of time sometimes. It does happen sometime quickly, but it generally takes 1 month. And therefore, it is not advisable to touch this if your due date is approaching. What
So
is the
just
meaning? Yeah,
yeah, sure.
yeah,
So
Kushal.
just for Zubaira, I will show after clicking on this
Yeah,
amendment,
yeah, that
what
would
will
help.
happen. So now it will start. Sorry, I think there's some problem with. I think there is some problem with portal. Now it just takes you to the another application called amending taxable person details. You got?
So yeah, in this case, you will have to go ahead and fill this, and then it will take a lot of time.
So automatically when you will select the amend, you will click on the amend option there. It will automatically take you to the another application called amending taxable person application. So we will skip that for now, and we will just focus on the corporate tax return filing.
Correct. And Irfan, to answer your question, unincorporated partnership, not very common in this region, and therefore I think you want to know the meaning of unincorporated partnership. So it's a similar structure like a company, but it is a pass-through structure. When I say it is a pass-through structure, what it means is it does not have a separate legal identity as a company has. It is as good as the owner and the unincorporated partnership being the same person. The owners are generally partners in the unincorporated partnership. So generally not very common in this part of the region, and therefore we not like to spend much time on it. And how is VAT applicable on it? I think we can cover that separately because this is a CT dedicated webinar. So we'll focus on CT right now.
True.
Yes,
So
please go ahead,
now
Kushal.
after this, I just want to know, you are doing the fund management activities. This is something else there, but as for you, you are just doing one business activity, that is income from investments. So you have to give the
Correct.
bifurcation to authorities also, like what was the estimated percentage of the revenue from each activity that you have. You have the option to add the business activity here also, that you can change the business activities here, but it should be as per your trade licenses and all. So right now I will just add it and give you 100% for fund management activities.
Surely.
So this is fun thing. Now another question, Kinjal. You are a big businesswoman. I just want to ask you, is your entity is part of a multinational enterprise group?
Not that big, Kushal.
Okay, no. But what do you think? Like, what is the relevance of this question here?
Um, So I think is the taxable person a member of MNE group? So I had read somewhere that if I was, I'm not that big as MNE, but I'm not even that small as someone who can claim a small business relief. So in case I was someone who could have claimed the small business relief, which is available for
Okay.
companies who are making revenue of less than 83 million. In that case, if I was a part of MNE, then I would have not been able to claim that small business relief. And I think
Yes.
that is the relevance here.
That is one of the reason that you have this option here, but there are also another provisions that are applicable. Now you know that BEPS Pillar 2 has already implemented. So if you are a MNE, then the BEPS Pillar 2 will be applicable on you. This,
Correct.
so basically there are some another things. There are some documentation like master file and all that is applicable for MNEs also only. So for so much of question, this particular question is relevant. But for now, for small business relief, this is the most relevant. But you have the revenue of more than 10 million dirhams, and you are also not the part of a MNE group. This is the case. You are not a taxable person resident of another jurisdiction, as per what this is what I think. Now I know that you are an entity that is established in a free zone. Am I correct?
That's correct.
Yeah. So that's why we will select yes here. Is the taxable person is making election to subject to corporate tax at standard tax rate?
Yes, I
Do
want to
you
do that.
you want to pay taxes at 9%? You don't want to
Yes,
get the
yes.
benefit of 0% taxes.
I cannot for some reason, so I do not want to.
Okay, sure. You are selecting yes. But in case you have selected no here, then FTA will ask that do you meet the requirements to be a qualifying free zone person? And once we select yes, that we meet the criteria to being a qualifying free zone person, then another schedule will open here called free zone details. But for the time being, we will just take that you are not opting for being a qualifying free zone person, and we will move forward. So now comes the second page, which will be most relevant for you, keeping in mind that you have a 500,000 dirhams of unrealized gains. So do you want to elect for realization basis or not?
I do want to because I don't want to pay
Yes.
taxes now. I want to defer
Yeah.
them.
You are not a bank or insurance service provider. You
Yeah.
want to check this option for all the assets that you are subject to fair value, or only to the assets that are held as capital account.
Okay, I need to think in this one because I want to understand the rationale behind this one. So, how does it impact?
So basically, if you have assets that are held on capital accounts, there is a definition of capital accounts. Then only assets which are held on capital account, you can take the benefit only with respect to those assets. But there is another option that all the assets that you are doing fair valuation. So all the assets which are being fair valued, you can get the option for that. So there is a list that FT has given that there is a definition that these are the capital accounts, or these are the fair assets which can be fair valued. But for now, for you, we will select the assets that are being fair valued, because we are doing the fair valuation of the investment that you have. We will select the
Sure.
yes. And now the effect for this will come after we will calculate the taxable income. So for now, this option is the one time option that we have to select while filing our first tax return only. Okay.
Sure.
And to the interest of audience, I just want to tell that this is the most important option that is selected only once. So you should have proper pros and cons of that, why we should do this option or we should not, because this have a lot of effect on your taxable income, basically on cash management from the angle of taxes for your business. Now comes the transitional rules part. Kinjal, I just want to ask you, do you have any assets that you have held before 31st December of 2023 or 1st January of 2024? You have any assets?
Yes, I do.
So if you have, then
Yeah,
but do those assets are being carried at cost, or those are being fair valued every year?
at cost.
So if those are at cost, so what provision says if you have any assets which are being owned before the first effective date for you, which is 1st of Jan 2024, then you have the option that you can eliminate the pre-taxing capital gains on those assets. And for that you have to select yes. And three types of assets which are qualify for this relief are immovable properties, intangible assets, and financial assets. Okay. But
Okay.
the financials that you have, I don't see that there are some assets like this. But in case you have any assets, you can select yes here for the respective assets. Okay. So we'll select no as of now because the financials that we have discussed don't have these type of assets.
Understood. Just one question. So right
Yes.
now we are selecting no, but if I want to select it a yes, next year I can do it, right?
y- you will not be able to do that because this is the option that is showing only on this return. Next year when you will start filing your return, you will not see this option in your return. You will not be able to see this option. This option is available only on first return that we have to file.
Oh, so then it becomes extremely important that whatever we want to select, we select in the transitional rules very appropriately. And even if we have assets, we should select a yes in that case.
Yeah, because there are
Always.
a
Because
lot of methods to eliminate the pre-taxing capital gain on this. Because for some assets, a revaluation report will be required. For some assets, you have to do on the time apportionment basis. For some assets, it is on the fair valuation basis and all. Out of these three assets, so we will select no for now. But you must think about this. Every client should must think about this because these are the options that we have to select while filing the first return only. We can't select that after this return.
understood. And
Yeah.
then you mentioned something about the revaluation reports. So do I need to attach them right now while I'm filing the
No,
return
no,
of income?
no, not right now. You may need to attach that while you will be getting the benefit of on sale of that asset. So, for example, you have the building and you are selling that in 2030, and you
Hmm.
want to opt for a transition provision benefit in 2030. Then you may have to attach that report.
Understood. So
But
then I'm not
for
required to attach anything right now.
yeah, yeah. But
Okay.
it is suggested to keep that in your hand so that whenever it is necessary, you can attach that.
Okay. Noted.
Now, small business relief will not be available to you as you have the revenue more than 3 million dirhams. So it is automatically uneditable option right now. There is no option that you want to select or not, but you can't select that here. Then now comes the question. There are no transfers within qualifying group that you haven't transferred any assets. So qualifying group have the definition that we have already discussed for transferring of tax losses, which means a group commonly owned by 75%. So as in your financial, there were no transactions related to transfer of assets within qualifying group or transfer or of a business or part of a business to another entity of the same qualifying group, which is called business restructuring relief. And then comes the foreign permanent establishment income, which says that if you have a branch or a a branch or some nexus outside UAE, which is agency PE or something else in outside UAE, then you can take the exemption to not tax that income from that particular branch in UAE. That is not in your case, so we will select no here. If that is the case, then we can select yes. Okay.
Understood.
Now we are going to the accounting schedule. This is just a mirror image of what your financials will say. Like this is just
Hmm.
mirror image. We just have to put our financial statements here. So can you please just tell me what your financial figure says? Your operating revenue was 10 million dirhams. What I think.
Yes,
Am I
that's
correct?
right.
Then expenditure that you have incurred to earn that revenue was 6 million dirhams.
6 million.
6 million dirhams. But
Yeah,
as what I can see that what you have told me that this 6 million was including these expenses.
that's correct.
So we have to show these expenses differently. But for so right now your 6 million dirhams will be reduced by 1 million dirhams, which is 700,000 here and 300,000 here. So your actual
Sure.
expenses for now will be 5 million dirhams only. Okay.
Okay.
Because these are expenditure another expenses, there are specific entries where we can put these expenses.
Sure. Now, I had one question here, and I had seen this question from the audience. What if
Yes.
there is depreciation? Then that depreciation would go to non-operating expenses or operating expenses? What I believe is because there's a specific schedule here, we should put it there.
Yeah, because as you can see, these are another expenses, direct expenses that you have earned incurred to earn your operating revenue. But
Correct.
non-operating expenses, they have given the specific fields. So in
Correct.
case there is a specific field, you should put that here, put the figure there only. But in case there is no specific field, then you can put that in another expenses or another operating expenses.
Fair enough, fair enough. So to answer the question, depreciation has to be put in the specific schedule, and the same would be applicable to all the specific expenses which are there, like salaries, fines, penalties, and all of it.
Yeah. So for you, there was a salary of 700,000 also
Yes,
that we will put here. There was no depreciation as you don't have any assets and all. You are
correct.
just doing investment. It will be zero.
I
You
don't have
haven't
any
incurred any
license, so
fines
until
and
now
penalties.
I'm not obliged to pay any penalties.
Yeah. So there will be no any fines and
Yeah.
penalties. But if these penalties were there, then these must have disallowed at 100%. You
Sure.
don't have an option, but that are not there. Donations are not there in the books. And now client entertainment expenses.
Hmm.
So specifically, this field is asking for entertainment expenses related to client, not all of your entertainment expenses. So we will just
Okay.
write 250,000 here because actual expenses is 250,000. I will show you that how this particular thing will impact going on. But right now, I will just write 250,000 here. Okay.
Okay.
I think we have written all of your expenses right now. We have
So we have
covered your
not mentioned 50,000 of staff recreational. We can mention that.
that we can do in other expenses.
Others. Yeah, makes sense.
Okay.
Okay.
Now you have dividend income also
Got it.
that we will write here because the portal is asking if you have any dividend income, then we will put that here. That is 300,000. Okay. And now, do you have any option that you can put the unrealized income that you have booked? Are you able to see? I don't think so.
No, not right now.
So we
Because I
will
think
put,
this is a mirror of accounting schedule.
yeah,
That's the reason.
yeah. For that, we will just put that in another non-operating revenue because that is your non-operating revenue, and we will put that here.
Okay.
And now, as we have put it both dividend and another operating revenue separately, then we should
Mm-hmm.
deduct that from here because
From
this is,
yes.
yeah, because this is the including those expenses. So we'll put only 9.2 million.
Sure.
Mm. Yeah. So as per you, your net profit as per books is 4 millions only. So that we
Correct.
have put it here. Now for all the blank figures in which we haven't put any figure, we just have to write zero.
Got it.
You can't skip by not writing anything. You have to put zero.
Sure. Otherwise, the return would not proceed.
Yeah, return will not proceed.
Okay.
You don't have any other OCI, so we will put zero also here. And now portal will ask for balance sheet also from you, not the
Hmm.
profit and loss statement, but also the balance sheet. That that will not affect your tax liability because taxes are generally calculated from profit and loss account only. But they will
Hmm.
ask for your assets also. For the time being, we don't have any figure. We will just
We'll
put
put,
zero
yeah,
zero.
yeah, we'll put
Yeah.
zero in the interest of time. But we'll have to fill all the figures here.
Yeah, we have to fill all the figures here. This is just a
Have,
this will be
okay.
just a mirror of your audited balance sheet or management accounts that you have prepared.
Hmm.
Now, as you can see, there is an option
Hmm.
that what was the average number of employees during the tax period.
Right.
This is the thing that clients have to maintain from their end also because this is the compulsory field that we have to fill. Without putting anything on this, we can't move ahead. So the relevance of this will be, now ESR is not been implemented here in UAE. That is waived off. So in interest of that also we have to put the average number of employees. And in case you are targeting the benefit of being a qualifying free zone person, then and also this figure will be important because there is a condition of satisfying the adequate substance for you. Okay. So
Correct.
for I think you are the only employee working for Kinjal Investment. So we'll put only your name.
Perfect.
Have the financial statements audited. Have you completed your audit? You are planning
Am
to
I
do the audit?
required to? Because I'm not claiming the QSFP benefit.
Yeah. But there is also another condition to get that requires your books of accounts to be audited. So from law, if you are having the revenue of more than 50 million dirhams or you are a qualifying free zone person, then and only you are required to be compulsory audit the books of accounts. In another case, you are not required to do the audit. So in your case,
Understood.
you are not required. But in case you have done the audit, then we just have to give the details. Like if anyone has completed their audit, then they have to give the name of the auditor and also the opinion that auditor has given. So for
Understood.
now, for you, I don't think so you have done the audit. We will just put no and move ahead. Okay.
Sure.
So in this process, you can see that we have given the books figure to the authorities. We have showed them
Okay.
that this is as per our books. Now we will start adjusting the figures there are some adjustment that we have already discussed from angle of taxes. So we'll start the adjustment of those items now. I don't think so. You have any assets that are held on equity method, or there. This option is for OCIs, though there are not other comprehensive income. So we'll select no.
Yeah,
Has
I don't
there?
want to go into these complications.
Yeah. These are not applicable for you also. So now, there are the portal is asking, has there been any unrealized gains, losses that you have booked in your accounting income? Do you remember anything? Is is this the case for
Yeah,
you?
that 500,000, right?
Yeah. So the 500,000, for that we have to fill a schedule,
Okay.
and in that item we have to give the details, like where are investment, like what is the description of assets. It is investments in shares
Yes.
of MICS International.
Okay.
We'll put that. Original cost was 5 million dirhams.
Right.
Net book value at the end was the 5 million dirhams plus the fair value gain that we have booked, which is 5.5 million dirhams.
Hmm.
Now, out of this, unrealized portion was 500,000 dirhams. So we have to put that here.
Understood.
I know it is little boring, but you know what to do.
No,
It's a
no, please
lengthy return.
explain this to me because I want to
Yeah.
file my return by myself next year. So I want to know all of this.
Sure. Where that's what my motive is, that so you can see that we have to put, and there were no losses, unrealized losses that we have booked. So we will just add and just click save and back. Never click cancel and back. Okay.
Okay. So yeah, this is a
So
practical tip.
this is a practical tip.
Yeah.
Because whenever you do the cancel and back, it will just remove the whole schedule. We have to fill that again. So as you can see, we have put that we have a 500,000 of unrealized income. It automatically showed that here. After filling the schedule, it automatically showed that here that it will be adjusted. There was no another adjustment. So we'll just write 00.
Hmm.
There were not the thing that I was telling, that is there any transitional adjustment. So if you have opted for yes in transition provisions and you have any adjustment relating to those assets, then while filing the return, this option is available that you can adjust the taxable income based on those provisions. So which is not applicable in your case, we will select no. Now, have you received any dividend from UAE entity?
Yes, yes, yes.
From
300,000
MICS
euros.
International only, I think you have received the dividend. So we'll
Yes.
select yes here that you have received a dividend. And for that also we have to fill a schedule called UAE dividend schedule, add new item. Company name is MICS International. TRN is optional. Profit distribution received by you was 300,000.
Okay.
So this is the case. Now again, save and back. So for all of your incomes, we have made the adjustments in tax return. Okay.
Perfect.
Now there is an option also for participation exemption if there are any assets like foreign investments, capital gains from UAE and foreign also, or foreign dividend also. Then
Sure.
there is option to fill the schedule of participation exemption and going next. So we have adjusted all of your incomes, the incomes that were there. We have put it up here. Now, as per you, we have shown there that we have a 250,000 of 250,000 dirhams of client entertainment expenses. Now, in
Yes.
this adjustment schedule, we have to put like what was the portion of that investment which is disallowed part, that is not deductible for the purpose of taxes.
So it
So
doesn't come
now,
automatically?
no, it will not come automatically because there can be option. It can be more than non-deductible part can be more. So
Hmm.
authorities ask from us, like you say, like what is disallowed part, and in
Okay.
case we have put 250 and we have to put 125,000 here for now. but we will put 100,000 only. Generally, it shows a error here that it should not be less than the to 50% of that, but I think that will show while submitting. So we'll just write 125,000 here. Okay.
Okay.
Just let me check if there is any error on that. I don't think so. But
I think
generally,
once
it
you
shows.
put 1 lakh, it might show an error. So can we try putting 1 lakh to show the audience about the error?
It is not showing error right now, but
It
earlier
will
it
show
was
in
showing
the
an error.
next. Yeah.
Generally, it will show, but for now, we'll just put 125,000 here.
Okay. Okay.
But it will show generally, and it should not be less than your 50% as per the law also. So it should be at least 125,000 here. There was no pension distribution which is non-deductible for you. So we will just 00. So this is all. This schedule is only for the expenses which are disallowed.
Correct.
You just put 00 here. There is no interest expenses. Interest expense is only a, it's a different complex transaction or complex provision that we may discuss later. But for your case, there was no interest. We'll just put right now. And now comes the question: are there any transaction with related or connected persons? What do you think? You have transactions with related persons or
There
connected
was only
persons?
one transaction with myself. I don't
Yeah.
think
So
transfer of losses would be a transaction, right?
yeah, because that is tax adjustment, not a
Correct.
transaction. So for you, if there is a transaction with related parties, no, you are not a related party for your company. You are a connected person of your company. So if we will select no for the related parties, now were there any transaction with connected person in the tax rate? We will select yes. Is the aggregate value of transaction was more than 500,000?
Yes.
Yes. And then it will ask adjustment as a result of payment which were not at market value. So for you, 200,000 was not at market value. Only 500,000 was at a market value. So
Right.
we have to disallow your salary from here now.
Oh,
Okay. There was no income or expenditure from a qualifying investment fund for your case. There was no another adjustment. Yeah. So we are now about to Yeah, it will ask. Yeah, there is a connected person schedule also here that we have to put for the details of connected person. Name of the connected person is Kinjal. No, you don't have interior in payment of benefit. It's a payment.
payment.
Yeah. Description, salary.
Salary.
Value of the payment provided by the taxable person to the connected person. You have provided 700,000. You have given 700,000 as a connected salary. Now the market value for that was
500.
500,000. It's 5 minutes. So adjustment for transaction with connected parties, it automatically showed that there will be adjustment of 200,000 for your case. So we'll
Understood.
now again we'll just do save and back. Yeah, in short. Now we just have to move forward. And now we are just coming to finalize your tax return for now.
I just have one doubt. I want to
Yeah.
really see what entertainment expenses you were saying that it might show an error. So can we just go back and check once again if
Sure.
it's still showing or no? We can enter 1 lakh and try maybe.
First, let me check what I have written here. It's a client and entertainment expenses only.
2,50,000.
Yeah, sure. And whenever you are filing the return, just try to save as draft as after
Correct.
every step, because sometimes due to technical errors, when you don't save or there is an error, your whole return will be waived off. Like you will not be able to see. Yeah.
Yeah,
So this is
yeah. Can we put 1 lakh and
sure,
see?
sure, sure. Sorry. Yeah, no, it's not showing.
Can we go next?
Yeah, next step.
Yeah.
Yeah, now it will show.
Is it showing?
Yeah, now it will show that it should not be less than 50%
Yes.
of your
So
So
I
sorry, I
think
forgot, but generally it shows the error that it should not be less than your 50% of your expenses that you have shown as client and independent. So it should be 125,000. It should not be less than that.
this is
Okay.
very important. And now this is
Mm.
again very important when how we are drafting our computations. Because if we have our computations correct, as Kushal had a computation for me, he was correctly able to give an amount here and process without any errors. So yes,
Yeah.
this is very important,
It can be more than 125, but it
but
should
not
not be
less.
less than. Yeah, should not be less than. Yeah, okay, done. Now here comes the final schedule. So as per you, you are paying taxes on 3.5 million dirhams. Is the
Hmm.
case?
Hmm.
No,
I
that is
think,
not the case.
yeah, I think my liability was reduced, right, with some magic.
Yeah, so I am just trying to do that magic practically on the portal now that there is a schedule for tax losses which you have to fill. So for Karishma, like Karishma's entity have shared you the profit, given you the profit. So for Karishma, they have to file the schedule tax losses transferred to another taxable person. But for you, we will fill the schedule for tax losses claimed for another person. Okay. So I will start with adding new item. Name of the transferring entity was
Karishma Consulting.
Karishma. Sorry. And here corporate tax TRN of that transferring entity is mandatory. So we'll just put a random number here for now. Amount of tax losses, they are asking me for a actual TRN number that is there. So just give me a moment. I will write a actual TRN number
I'll,
here.
I'll I'll help you with it.
Sure. Just you can give me the TRN number of Karishma Consulting if you can.
Yeah,
I
sure.
think that must be ready with you.
I'll send it to you.
And now the amount of tax losses adjusted was 1 million dirhams. So that's why I we tell everyone to keep the data ready at their end. Every data at their end, because sometimes
Please
you don't
don't
have
make
the
your clients feel bad about it.
no, I am not making feel them bad, but uh, sometimes there are the last due dates, there are the end of due dates, and we may don't
Very
not
true.
have the data at their end. So we should keep everything. These small details can give us the penalties and also the non-compliance from angle of taxes. So we should keep everything ready at our end every time.
Can you note the TRN
Sure.
1049
1049
41
41
420
420
2
2
4 times 0 1.
1. Now I will just add. Okay, we have just added
Okay.
that you have taken 1 million dirhams from Karishma's entity, and now we will save and back. Yeah. Now, as we have calculated, you have a tax liability of 193,500. Okay.
Hmm.
So another step is in that is now what do you think? We have to submit the tax return?
I have to attach something?
You have to. But what do you think? You have, I think so. You have audited your books of accounts, and the option is asking to attach the financial statements.
Just
So
before
what?
that, there's a question which I can see. Have any estimated figures been included in the corporate tax return? I don't have any estimated figures included in
So
my
this option,
financials.
sometimes clients ask us like they have provisions in your books, like provision for bad debts. Is that is estimated figure? No, that is not estimated figure. But if there are any
Correct.
figures for which we don't have any base or projected figure that we have used in financial, then we should mark yes here. But in your case, there is no projected figure here.
Understood. Understood. And now
And
coming to the
and
most, yes,
And also, I forgot one point. Tax losses on also tax credit. So tax credit means your foreign tax credit. So if there is any income that you have incurred on your profit and loss statement, and you have already paid taxes on that, then there is an option that you can get the tax credit for those figures. But that is not the case for you. We will skip for that. So we will select no here, and now we'll proceed without attaching the financial statements. So they are asking, so like please provide the reason for not uploading the financial statement. Not they are not asking to attach the financial statement. So we have the options. Like in case we have done the audit, we should attach the audited financials. In case we haven't, we can provide the management accounts or unaudited statements also. And in any case, if we haven't prepared any statements, then we can give the genuine reason that why we haven't prepared the tax return and we can submit. So in your case, I don't think so you have prepared any financials. So we will just, for now, we will select NA. We can give your genuine reason that this was the reason that we haven't used financial statements. Now we can move forward. So this is the final page of review and declaration and your
But
returning
apart from
summary.
financial statements, I'm not required to submit anything, right? Right now, nothing is mandatory
Right
for
now,
financial.
nothing is required. Based on your
And
option,
not
which I
even the
will
valuation reports, not
not
local file, no master file,
nothing,
no
nothing,
benchmarking reports, nothing,
nothing is required. But the local file benchmarking reports are required only to be submitted within 30 days when FTA will ask.
which is impossible. So I should make sure that I'm preparing it now.
You should be compliant at any point of time. FT can come to you at any point of time. They can do the tax audits and all. So I will not submit it now because it will be submitted wrongly. But you can also have the tax summary here in which you can get that uh, um, aerial view of what is your tax liabilities and all that, how you calculate the tax liability and no. And
So
right now,
Kushal, can you send me a PDF of this file so I can
that's
review
what
it
I'm
at
telling
my
you.
end?
No, I can't. I will not be
Okay.
able to because there is, as you can see in the screen, there is no option for me to download the PDF. There is an option to download the PDF. The thing in which you can review the return is by logging in from yourself and logging in and reviewing at your end by logging in. There is no option as of now to download the draft PDF form or any another file for this. Okay, so your return is submitted now, Kinjal. So I'm just canceling this return for sake of this, and now we
Just
can.
one sec, just one
Yeah,
sec.
sure.
I just want to go to the first page and I'm very curious to know. Okay, so this year I did not claim the free zone benefit, but next year I can, right? If I want to.
No, no, that's the case. So the freeze on rule says that if in case you haven't satisfied any conditions of being a qualifying free zone person or you haven't selected for current year, then for the next 4 years you will not be able to get the benefit. So in your case, you will be able to open this option of getting the free zone benefit in financial year 2029 only. Before that, you will not be able to get this benefit.
So this is something everyone should know because
Yeah.
I don't know if there's enough awareness about this in the market that if I'm not doing it now, I cannot do it for next 5 years as
Yeah,
well.
you will not be able to, for free zones also, what I would suggest to entities that they can have a pro rata, pros and cons or cost benefit analysis for that, because free zones come with their own limitations that they can't be a part of tax group, they can't opt for small business leave, they have to do the additional compliances of maintaining substance, transfer pricing, and audit will be compulsory for them. So they have to do. But in case, we'll just go through like in case you were a qualifying free
In
zone
case I was
person,
a free zone person, yes, I want to know then what would happen.
then we will just select yes, that yes, I am satisfying. And whenever you will select the next page, it will ask for the details that you are satisfying the conditions.
Understood. Okay. Can I just
Basically, they
go
will
through
ask
it
like what is your,
quickly?
yeah. So your free
So,
zone schedule is open now.
so
So
I think in the first, yeah, please go ahead.
yeah, sure. So basically in free zones, there are two basic conditions. Another three are the compliances, but the conditions from angle of taxes are that you should earn a qualifying income and you should have a adequate substance at your end. So first they will ask about your revenue, like from which activity have you earned the revenue? Is it from a free zone to free zone, or it is from a qualifying activities? So I will not go for the provision for now because free zone taxation is itself a different law.
Correct.
So
Correct.
they
Correct.
will
Correct.
ask for the your total revenue details, which is your the 10 million dirhams.
Hmm.
Then they will ask, do you have any revenue from domestic PE? No, no. You have any respective commercial properties? Because these are non-qualifying income, which are straightforward taxable at 9%. These
Correct.
two incomes that we are selecting. We'll select no for now.
Hmm.
So this 100,000 is the figure that you have to give for the calculating the qualifying income. Now they will ask, do you have any non-qualifying revenue? that revenue that you have derived from other than non-qualifying incomes or non-qualifying activities or other than no free zone person. We'll select no, that we don't have any non-qualifying incomes.
Okay.
Now there is a de minimis requirement. So they will ask the de minimis requirement, de minimis, in which they will, based on information that we have shared up there, they will check like whether you are satisfying the de minimis or not, and it will be automatically checked. You don't have to do anything from your end. Portal will itself check that based on figure that you have put it in, that you are satisfying the condition or not.
Understood.
This is about the qualifying income. Now you have to give the details like what have you earned any qualifying revenue? You will say yes. Revenue from another free zone person, revenue from free non-free zone persons, but from qualifying activities.
Hmm.
Yeah.
So when I'm sitting to file the free zone schedule, the most important set of document which I have to maintain is my bifurcation and split
Of the
of
revenue.
revenue
Yeah.
between qualifying, non-qualifying, excluded, non-excluded, from free zone to free zone person. Someone had a question, I'm earning free zone to free zone. In case you are earning free zone to free zone, in that case you have two options. One is you will elect for filing as a free zone person. Second is you will opt for a standard rate, like I did.
Standard.
If you are electing for a free zone person, and then all your conditions are being satisfied, in that case you have an option here to mention your revenue from free zone to free zone person, in which case that revenue will not be subject to tax, but yes, a disclosure and information will still have to be provided.
So, so my just to add on to what you have said, sometimes clients asks us that we are a free zone entity and we are not able to satisfy the conditions. So will be taxed. So they have question in their mind that they will be taxed at 9% straightforward, and they will not get the benefit of 375,000. So that is not the case. From angle of taxes, you can be a normal taxable person or you can be a qualifying free zone person. In case you are a qualifying free zone entity, then you will pay 0% on your qualifying income. But in case you are a free zone entity but you are not able to satisfy the conditions, then you have to pay taxes at standard rate, which means 9% on income which is more than 375,000 dirhams. This is
That's
the case. So additionally, we just have to add, like we have put it up here, that we are deriving income from qualifying activities. So what is the nature of those qualifying activities? So in that,
correct.
we will just say that it's a holding of shares and securities for investment purposes.
Correct.
Now, another conditions that they will ask, are you satisfying the substance? So for substance, they will ask, do you have employees in free zone? Because substance have the condition that you should have employees in the free zone entity. So you will have to select yes. Then they will ask average number of employees that are located in free zone. The question comes, they are asking separately here for the free zone because they have asked somewhere else. So in the accounting schedule, they have asked this same figure. So they have in that field, they have asked average number of total employees, not average number of total employees specifically for free zone. So in our case, it will be specifically for free zone because you are satisfying the substance criteria. So we'll say that total number of employees was one. And this advocacy may differ from business to business. For manufacturing businesses, educate employees can be 200 to 2000. But for a holding company, it can be two employees also. For
Correct.
trading companies, it can be three employees also. So it will advocacy of substance will depend on business of business. So to set, there are some questions that total operating expenditure, total capital expenditure on deriving qualifying income from a free zone. So we'll just write a random figure here. Have there any core income generating activities outsourced? So law gives us the option that we have the option we can outsource our substance to another party also, which is in a free zone. In case we have done that to satisfy our substance requirement, we should mention the details of that service provider also, the outside service provider also. But that is not the case. Now free zone will authority will ask you that you should confirm that you are satisfying all the conditions of being a free zone, and out of which the major is that you are doing the audited financial statement. And now they are asking the details, EBITDA and salaries and wages attributable to each emirat. So I am also curious about this, like why they are asking this specifically for free zone entities return. And anyone in chat box can guide us like why this is the case that they are asking for each Emirates. From my understanding, it may be for the bifurcation of the tax revenue between the Emirates and all, but there can be reasons. But we have to keep the additional details at our end for EBITDA and salaries for a free zone entity, the Emirate wise bifurcation of these or everything that we have to keep. And this is the end of your free zone schedule and also the end of your tax return. Anything, any else question that you have in your mind, Kinjal, or any audience that they have in mind that they want to see in the practically on the screen, then we can proceed with that.
Yeah, I think we'll wait for next 2 minutes to see if
Sure.
there's any question on the Imara tax portal. Um, and then we would just move to, can you just go back to the PPT if possible?
To PPT? Sure.
Yeah. Staff entertainment, 100% allowed. No doubts about that. What can be the checklist for a free zone, which we can ask to the client? Checklist for the free zone in terms if you're talking about filing the return of income, your main and the most time consuming document will be your revenue bifurcation. If you have revenue bifurcation, all other conditions are just yes and no. And the
Yes.
second is the number of employees. So these two are the main set of documents which you need to maintain. Apart from that, everything is just conditions compliance.
And additional
Mm.
to it will be the salaries bifurcation of the EBITDA and salaries Emirate wise that they will ask.
Kushal, this question is for you on your favorite topic, tax grouping. If there's one entity in mainland and another one in free zone, and if tax group is created in the middle of the year, then does two returns required to be filed?
So for formation of tax group, the condition, the law says you can form the tax group for any tax period and you can submit the application before the end of tax period. You can't do after that. So
Yeah.
just taking an example of 2024, in case you are a free, you have an entity in mainland and in a free zone, and you are satisfying the condition throughout the year, then you can form the tax group and you don't have to file any two different tax returns. But the conditions are that the condition should be satisfied throughout the year, plus you have filed the application to form the tax group before the end of the tax year. These are the two conditions that you have to satisfy, and you don't have to be filed two different tax return. There will be only one tax return for the whole tax group.
Got it. And I think we've answered most of them. And the other ones which we are missing would require some time and
And the
evaluation.
yes. So there is another question that if the share is held less than 12 millions for 3 months, then you will not be able to form the tax group, because tax group has the conditions that you should own at least 95%, and those conditions are required to be satisfied throughout the tax period. This is the major condition. And in case that is less than the 12 months, for example for 3 months, you will not be able to form the tax group. So for that current period, you have to file the two different tax returns, first for the mainland entity and another for free zone entity. And from next year, you can form the tax group. And from the next year, you can file the tax returns based on the tax group.
Perfect. Outsourcing. There's a question by Mohammed Abid on outsourcing. So, in
Yes.
case we select yes in outsourcing, then in that case, there are details and detailed level of details to be given
Yeah.
for to whom you have outsourced, and the level of check which FTA wants to do is that the entity, so assuming you are a free zone entity, you have outsourced your services to someone else. First question is, can your core income generating activities be outsourced? The answer is yes, you can outsource. Do you need to outsource within the same free zone or any other free zone? The answer is any other free zone.
Yeah.
So two most of the important relaxations which you have is one, you can outsource your core income generating activities. Second is you can outsource it to any free zone. Now, when you are outsourcing, that means for obvious reasons where you're outsourcing is you lack substance and you need to meet the substance test. 8 out of 10 situations we have seen where that the substance test is not met and therefore they want to outsource it. When you're outsourcing it to someone, FDA wants to check that even that entity to whom you have outsourced has substance. And
Yes.
therefore, if you look at the return of income, they are asking that the entity to which you have outsourced, does that entity have sufficient level of employees? So yes, these are the level of details which have to be given when you are outsourcing. So hope this answers your question. Can you
And
just bring up the PPT quickly?
yeah, sure. Yeah, can you see my screen? Yeah,
Yes, we can. Can we just go to the QR codes? I would really like to get a feedback for this session.
sure.
So we have touched 5:30 and we'll not be able to extend more. But you all can reach out to us anytime. I'll just drop our contact details in the chat box for you to save them and reach out to us anytime you all need any assistance. Um, we are here to help you on this ever evolving topic. So the code which is there on the right left side is for providing feedback. Please tell us, did you like the session? Do you want us to do such more interactive sessions? Do you want one more session on the return of income? Any amount of time which we do, which we spend on taking such webinars is less. So please tell us if you want us to do one more session of return of income. We'd be more than happy to do it for you all. And I would also like to know that what you want to cover in that return of in the next session. So please let us know what you all want to cover in the next session as well. And we would definitely love to do it. If you want to decode, if you want us to decode the free zone session, free zone schedule into more detail or any other schedule, that we would love to do it and we would do a second session. We would repeatedly keep doing such sessions until September. So yes, do provide us a feedback and we would await for it. And we do run a community which is local to global, where we keep doing such dramas every day. So please feel free to join this community. We are on a mission to keep tax an interesting subject. So yes, we would love to do another session on related party and free zones. Yes, we would love to do it. So please let us know in the feedback what you all want to do, and we would love to do it. Um, Thank you once again. Please spend 2 minutes to provide us a feedback. And I'm just dropping my number here. So in case you all have any doubts, please feel free to reach out to us.
Yeah, we and Kinjal, I think you forgot to announce something that we are coming up with another webinar on family foundations.
Yes, yes, yes. So please go ahead and do the announcement.
So, now there are 2, 3 guides that have been published, and there are some decisions regarding the compliances for unincorporated partnerships, family foundations, and there was a guide also. So, within coming 2 weeks, we are coming with another webinar on the same topic, decoding the latest guides, decisions, and announcements in relation to the family foundation and partnerships. So if we will share the link and details soon, and feel free to join, and we will be happy to have you there in that event also.
Perfect. Can we just go to the feedback form again so
Sure.
that people can give their suggestions on what they want the next session on, and
Sure.
we can do it for them. And please do join our community. We would love to have you there.
I think that's all. And Kinjal, can we wind up now, or you have something?
We'll just display this.
Sure.
Yeah,
Yeah,
we'll
QR
just
code.
display this for 2 minutes and wait for people to join in. and then we can
Hmm.
wind up. Recording of this session. So unfortunately, we did not wanted to provide the recording of this session because we had decoded the entire return of income here, and you all would appreciate this is a dal roti. But yes, given that we have got so much kind comments from you all, we would definitely upload this. And we would also give a synopsis of our session uh, on the email. So we have
Hmm.
emails of everyone. So we would do that.
That's great, Kinjal.
Yes.
And thank you everyone for giving your precious 2 hours to us. It is very well, and it gives us the boost to do such sessions again and again.
Thank you all. See you all next week with another session. Thank you so much. Hi, Deepika. I'll answer this for you in case you are still there. So in that case, I think if you have 10 employees throughout the year, then the average will come out to 10 only. But yeah, if any employees have left and any new employees have joined, then we need to take out the average number. But if it is 10 throughout the year, then it would be 10 only. I think we can end this. Kushal, Kiran.
Thanks everyone for joining the session.
Thank you. Thank you.
Thank you
See you all
everyone. Thank you.
soon.